Hello and welcome to Investing Testing. Today we're going to look at stock exchanges. In particular, we're going to have a look at Binance, since that's an open source, decentralized stock exchange. It's easy to access and we can have a close look at it. So let's get straight into it. We can see here now you're looking at my screen. This is Binance. This is what you'll see when you're wanting to do a spot trade. You'll come to this page. What we're going to be looking at in particular is over here. This here is the orders book. It's kind of understandable. I'm sure when you first look at it, you're just overwhelmed with the amount of numbers, but it's pretty simple in the way that it works. Say you wanted to buy some Bitcoins and you wanted to buy them at a certain price. So you say, okay, I would like to buy Bitcoins at 50,000. And then your order would come up here. I can't scroll down, but we'll probably go further down on this scale, because you can see that the top one is always going to be the highest value of what's being bought. And this can be filled either by somebody selling Bitcoins at market value, which is basically saying that they will sell their Bitcoins at whatever's at the top here. Or you actually, when you put in your buy action, you already automatically are the same as one of the sell actions. So somebody else might be selling at 50,000, you buy at 50,000. That's immediately the order is filled, and so it comes off the book. So this part at the top here is sell. This part at the bottom is buy. And yeah, so you can see that it's in order of the highest first on the buy section and lowest first on the sell section. That's done for a reason, to make sure that if you're wanting to buy something, you wanting to buy it at the cheapest price possible, and if you wanted to sell something, you want to sell at the most expensive price possible, obviously. And yeah, so you can see the overall value here is always going to be the one at the top. Or is that the average value? That could be the average value between both of them. Oftentimes when you're looking at these graphs, they would give you the average value depending upon the sell price and not the average, sorry, I shouldn't say average, I should say middle price between the sell price and the buy price. And yeah, so that's how your order will be filled out. Eventually, if you do put 50,000 on and it's not being sold right away, eventually if it starts going down in price, generally, if you start finding that this starts going down more and more towards 50,000, eventually your order will possibly be filled out by somebody. And yeah, so that is essentially what an exchange does. It's buying and selling of stocks or commodities, or in this case, Bitcoin, crypto. There are obviously the bigger exchanges for stocks and shares is the biggest exchange in the world is the New York Stock Exchange. They have a market cap of $22.9 trillion. It's an astronomical amount, and there's a reason for that. I mean, they are the world's largest stock exchange, and they trade a huge amount of stock in that. When it first started back in the late 19th century, they had a lot of millionaires who owned certain shares in certain businesses, and they were wanting to trade amongst themselves, and they found it good to begin with, like to be trading amongst themselves, but there was very few of them that could afford to do that. And then they decided, hey, you know, there are a lot of people out there that will probably be interested in having a little piece of the business as it grows in value, and to be able to have their say in how the business is run. And so they decided to set this idea of charging fees for ordinary people to come in, to be able to put their money down and be able to buy a percentage, a small percentage of the stock that these millionaires own. And these millionaires were able to make a lot of money this way, since the people were willing to pay more than what the millionaires originally paid to acquire such a large volume of shares. And this was ran like a club to begin with, but it grew bigger and bigger as more and more people were interested, since the middle class realized, hey, we could actually have we can make money from this over time, and our money can increase in value. And so they then had to become more organized, and they created the idea of stocks and shares, and it grew from there to what it is today, an organization backed by the digital era. Well, they're still using certificates, mind. So they're still signing off certificates to say if somebody owns a certain amount of those stocks and shares, and there's a register to say who owns what of what company. And they were able to. So, but these days, what happens was, because of the sheer volume, then brokers had to get involved to be able to broker a deal for the average person with the exchange. And there's a variety of brokers these days, especially online. And you'll be able to, let's have a look at the list here. So a big one that I'm using right now is eToro, because I like to copy trade people. It's a lot more easier to allow other people to trade for me and to increase the value of my stocks and shares. But that's a different story. We'll talk about that another time. But a broker essentially is somebody that has a huge amount of stocks and shares themselves from all their different clientele, and they're able to trade that on through the stock exchange. Originally, it was over the phone. So in the 90s, you had to call somebody and say, "Hey, could you invest in this company?" And you'll see in the movies, that's why there's a lot of shouting and a lot of people on the phones, because it was a stressful job being a broker in the 90s, because you had to be as quick as possible to get the best deal for your client. And of course, otherwise the client might be pretty angry. I mean, you can lose a lot of money if you're not careful. And it wasn't the most perfect system, because obviously using the phones and it's a slow process. But luckily today, living in the 21st century, we have the speed of the internet. And now we're, instead of talking minutes to make a transaction, to buy stocks or shares, we're talking seconds. And even less than seconds in some cases. And there are cases of investing companies actually trying to get as close to the stock exchange as possible to try and have the connection with the stock exchange as quick as possible, so they're able to trade extremely fast in the milliseconds. But that's a completely different ballgame. As a retail trader, you won't be getting into that so much. So we've talked about the order book. I hope you have a vague understanding of what a broker is. It's somebody who will trade for you. And there are, of course, there's a New York Stock Exchange, then there are the London exchange. Then there's the a bit of a mind block right now. There's another big one in America. There's the Paris exchange. There's exchanges all over the world, very big exchanges who trade the stocks and shares in the trillions. I mean, we'll compare that to Binance, and Binance is only in the billion. Is well, 2 years ago, it's January 2018, it was capitalized at $1.3 billion, whereas you can see the New York Stock Exchange is trading at $22.9 trillion with their market cap. That's essentially how much all of the stocks and shares that and the commodities and everything that the New York Stock Exchange trades is worth. And that's the same with Binance. It's with all the cryptocurrencies, how much they're all worth. It's 1.3 billion. It's a lot of money, but obviously it's clear that New York Stock Exchange is much bigger. So I mean, so we have a basic understanding that you need a buyer, and that buyer needs to be a millionaire, and they need to own have a potential of purchasing a huge, vast amount of stocks and shares, to be able to go to the stock exchange and say, hey, I've got this huge amount of shares that I would like to sell, and then the stock exchange would be happy to do that. But if you had a small amount of shares of a company, if you were one of the first, then the stock exchange might not be actually interested in you. But here's the interesting thing. Now, it used to be that you could not get involved in first-hand buying of stocks and shares. However, there is this website, Wefunder.com. And I really love this website because you have a choice of different, let's take this for example. You have a choice of various different people you could invest in. And you can invest a minimum of $100. That's the same most of the time. So you invest your $100, and they have several stages to go through, and you'll be actually one of the very first to purchase, like to invest in this company, for example. But of course, this company would need to go through various different stages to be able to get to the point where they can go on the stock market. So you're not able to trade this straight away. But this could potentially, if it's a winner, it could go up dramatically. If it's a loser, it could just flop and you lose all your money. That's the risk. But it's so cool that now a small person with $100 in their bank could possibly actually put this into here. I find that absolutely amazing. And then eventually they will go to the point where they have to get somebody with a huge amount of cash that is willing to invest in their idea. So this is kind of risky in that sort of sense as well, because not only are you worried that the company will go under, but you're also worried about the fact that an bigger investor may not be interested in investing into this company, and therefore it will never reach the stock market if that happens. And if it doesn't reach the stock market, and then you can't sell your shares. But I don't really quite know what would happen in that sort of situation. However, they do have, you can read up on all of the investment terms. I will leave a link to this in the description once this live stream is finished. Yeah, and so that is a way that you could actually invest. If you've got a spare $100, you're willing to risk just to play around with, just to see what happens in the long run. But this is long-term investment, I must warn you. I'm thinking we're talking 2-3 years at least to be able to get to the point where you're going to be investing, you'll be able to sell your stocks and shares in this company. And I think that is pretty much everything. Had a look at Binance. We understand the Binance is an exchange, but I haven't really gone into details. I mean, Binance is absolutely fascinating. If you want to read up more on it, We don't necessarily need to know all about the fact that it's decentralized. But if you want to read more up on it, then you certainly can. And we've also talked about the New York Stock Exchange, and there's so many other exchanges around the world. We also talked about first-hand stocks, and we understand the order book, and we also hopefully understand a little bit about brokers. I hope this was educational for you, and I really hope you subscribe and like and join this channel, because I'm really excited to continue with this, because I'm wanting to get into making more videos on how my journey will be going into actually trying to make money on all of this. I have already made money over the past year, but I'm wanting to make more. I want to become a trader, perhaps eventually full-time. Not necessarily in the stock market, but there are various other avenues and ways of making an income from investment. So I look forward to you coming into the next video, and I hope you enjoyed watching, and I'll see you